Welcome to Smart Study ACCA online classes. This is your ACCA F5 Performance Management teacher Naveedur Rahman, and today we are going to discuss. We'll do some questions from your BPP revision kit from decision making techniques section. Right, so that is basically the second section of your revision kit. So let's start. We'll start from question number 61, and it says, which of the above statement is or true? Which of the above statement is or true? A decision tree is a way of representing decision choice in the form of a diagram. It is usual for decision tree to include probabilities of different outcomes. Alright. What about the statement now? The following statement have been made about decision tree. Each possible outcome from decision is giving an expected value. Alright. Is this statement true or false? Right? Well, this statement is wrong. Why? Because it says each possible outcome from decision is given an expected value. Is given a probability. Not an expected value. Expected value is basically the result of multiplication of probability and outcome. The second statement says each possible outcome is shown as a branch on a decision tree. This statement is true. So the right answer is only to B. Let's see the second one. It says the following statement have been made about price elasticity of demand, and we have to see if the statement is true or not true. When sales demand is inelastic, a company can increase profit by raising the selling price of its product. Is this statement true? Well, this statement is true, because if the price is inelastic, changing the price will not affect the demand, right? Let's read this again. It says when the sales demand is inelastic. Inelastic basically means that the change in price is not going to affect the change in the demand. A company can increase profit by raising the selling price of its product. So if it is not going to affect the quantity, you are not going to increase the revenue, and if you are not going to increase the revenue, obviously your profits will not increase, right? So this statement is true. The second statement says price elasticity of demand is measured as the amount of change in sale price measured as a percentage of the current sale price divided by the amount of change in quantity demanded measured as a percentage of sales volume. Actually, this statement is wrong, because if you see the formula of price elasticity of demand, it is basically percentage change in quantity divided by percentage change in price. And the statement says that it is measured as the amount of change in sale price divided by the amount of change in quantity. So the actual formula is upside down, right? So the first statement is right and the second statement is wrong. So the right answer is only 1A. Let's see number 63 now. It says the following statement have been made about cost plus pricing. A price in excess of full cost per unit will ensure that the company will cover all its costs and will make profit. This statement is not true. This is wrong. Why? Because we need to sell enough units to create sale revenue for us to cover all overheads, right? So you have to consider that how many units are you selling also, right? Because if you sell more units, then you can cover more overheads, and more units will obviously absorb more overhead, right? And absorption per unit would be less. Then the second statement says cost plus pricing is an appropriate pricing strategy when jobs are carried out to customer specification. Yes, because when there is no competition and the customer has requested for a product to be made for specifically for the customer, then obviously that cost has to be charged to the customer, and then we'll have a profit on top of that, also a markup on top of the cost also. So this statement is true, and the right answer is B. Let's see the other one. This question is about linear programming. I haven't covered it for my students, so I'll not be doing questions from linear programming in this session. And so let's see number 65. 65 says the following statement have been made about the decision making under condition of uncertainty, right? And again we have to see if the statement is true or false. Expected value is more reliable basis for decision making when the situation where the situation and outcomes will occur many times than a one-off decision, right? This statement is true. Expected value is not used for one-off decision. It is normally used for long-term decision making. Then the second statement, a risk-averse decision maker avoids all risk in decision making. Well, risk-averse will want to take less risk, but they have to take some risk, right? So we won't say all risk, it should be actually less risk. Or we can say that a risk-averse decision maker avoids some risk in decision making. So some risk in decision making. So second statement is wrong. So only one is the answer. So A is the right answer. Now number 66. Which method of the pricing is most easily applied when two or more markets for the product or service can be kept entirely separate from each other, right? If you can keep two markets separate from each other, when that would be what we call price discrimination. Like you are selling a product in one market, let's say for $100, and in the other market the same product is sold for $110, right? So that's what we call price discrimination, right? Number 67. A company has fixed cost of 1.3 million and a variable cost of 55% up to the sales level of 1.5 million. But at higher volumes of production and sales, the variable cost for incremental production units falls to 52%. What is the break-even point in sales revenue to the nearest 1000, right? This question was found by some students a bit difficult, and I would say that this is a bit unfair for 2 marks, but this is how the exams are, so we cannot complain, right? And we have to solve this question, right? It will take a little bit of space, so I'll do it separately on a different page. Alright, so let's do it on a different page. Question number 67, we'll refer to the question. Question number 67. BPP. So, let's see. It says that the fixed cost is 1.3 million. Well, first of all, you should know that the formula for break-even sales is fixed cost divided by contribution to sales ratio. So let's write the formula first. Break-even point sales is equal to fixed cost divided by contribution to sales ratio, right? Well, first of all, if I say that for break-even point, selling price minus variable cost minus fixed cost is equal to profit, and for break-even point the profit is 0, so selling price minus variable cost minus fixed cost should be equal to 0. Selling price minus variable cost is contribution, and the fixed cost is minus fixed cost, so it will move to the other side of the equation, and that will become contribution is equal to fixed cost, right? So contribution is equal to fixed cost. The other thing that we can see in this question is that the variable cost is 55% of the sales. So let's say if the sales is 100 and the variable cost is 55, then basically it means that contribution to sales ratio should be 45%. Or we can say that contribution is 45% of the sales, right? Alright. So variable cost is equal to 55% of sales. Therefore, contribution is equal to 45% of sales, right? Okay. Now, the question says that at the sales level of 1.5 million, this will happen basically, this variable cost is for the sale level of 1.5 million, right? So 1.5 million multiplied by 45% should be equal to let's double check, I'm not sure about this figure. So 1.5 multiplied by 0.45 is equal to this, and this multiplied by 1 million should be 675. Yes, that is 675,000, right? So that is 675,000. Now what is this? We said that 45% of the sales is contribution. This is our contribution basically. This is contribution. Alright, and we can also say if this is the contribution, right, and that should be equal to fixed cost also, right, because in break-even point contribution is equal to fixed cost, as we have proved it over here. Alright, so contribution is 675,000, right? So this is the fixed cost also, therefore fixed cost is equal to 675,000. But is this the total fixed cost? This is not the total fixed cost. Our question says that the total fixed cost, the company has a fixed cost of 1.3 million. So basically this is the fixed cost for the sale level of 1.5 million, and it means that we have some other fixed costs also, right? So the other fixed cost would be, therefore other fixed cost is equal to 1.3 million, which means 1.3 million, and the extra fixed cost is 1,300,000 minus 675,000, which should be equal to 1,300,000 000 minus answer should be 625,000. So now we have the fixed cost, and what else do we need? We need contribution to sales ratio in order to complete the formula for the break-even sales. So we have the fixed cost, and now we need contribution to sales ratio. And then our question says that the variable cost for incremental production units, fall to 52% of the sales. So the variable cost for incremental production units is 52% of the sales. So again, contribution should be equal to 48% of sales, which in other words is saying that contribution to sale ratio is 48%, or which is, we can say, 0.48, right? So contribution to sales ratio is 0.48, and now we have the fixed cost also. The fixed cost is 625,000. So break even point in revenue terms should be contribution, which is the fixed cost, 625,000 divided by CS ratio, which is 0.48, and this should give us 625,000 divided by 0.48 should be 1302083, or we can say that is 1302083. Alright, so this is the sale that we need extra to have to achieve the break-even sale. This is not the complete answer actually. This is only the break-even sale for the incremental amount that we are selling, right? So the complete break-even sale should be the previous sale, which was 1.5 million, and this figure, and if you add them together, this will give you your total break-even sales. Your total break-even sales should be 1302083 and 1.5 million, and that should be equal to 2802083. 2802083. This should be the answer, right? 2802083. Let's see if we have this option in our revision kit. So 280, because that is to the nearest 1000, so D should be the right answer. Alright guys, I hope this was helpful. Thank you very much.